All right, well, good afternoon. Thank you all for taking a few moments today to talk about medical loss ratio rebates and how you as an employer should handle them if you are getting a rebate. I'm Corbin Granger, Senior Vice President here at Towne Benefits, and I work in compliance. For those of you who haven't been on a webinar before, I run through the slides. You get a copy of the presentation. We're also going to include what I call a medical loss ratio calculator, and then we post the webinars actually to our TowneBenefits.com site. So hopefully that should be helpful. And of course, I'm always available if you have any sort of questions. So first thing is, as you know, I'm not an attorney. I don't have any law and order music behind me, and I don't play one on TV, and I'm not a tax specialist. But this is based on the current DOL, HHS, and IRS guidance regarding these medical loss ratio rebate rules. It's one area under the Affordable Care Act where there actually is a lot of flexibility, and part of the reason for that is, though it sounds like a good idea to give rebates, once you drill down into, well, how is this going to work, and what about people who are no longer participating, it can get a little complicated. So you'll see in the presentation that DOL guidance has been very, very flexible and continually uses the phrase, reasonable and fair. But just so you know, I'm not purporting to provide any legal or tax advice. Now, what is the medical loss ratio, or what we call the MLR? It's part of the Affordable Care Act, and it applies only to fully insured plans. So in the individual and group market, insurers must spend 80% of the total premium on medical care and quality improvement, and no more than 20% on administrative expenses. So basically, most of the premium dollar has to go for actual medical care. The same thing in the large group market, except it's 85%, 15% administrative expenses. So basically, if the insurance carrier, quote unquote, keeps too much money, they have to issue a rebate to the policyholders. Now, we do have some information on some carriers that are issuing rebates. They do have until the September 30th deadline to issue rebate checks, and some of them are still in that calculation process. But Anthem in Virginia, the HealthKeepers HMO, they are issuing MLR rebates in individual and large group. So if you happen to have anybody in your family, for instance, my son is on a marketplace plan, but he's on Optima. Optima isn't issuing any rebates, so he won't get a rebate. But if they had an individual plan with Optima in Virginia, they would, or large group. Anthem Health Plans of Virginia, the PPO, also issuing them in individual, small group, and student health. Optima isn't issuing any rebates. Cigna is in the large group market. And so you do have until September 30th. So you may, if you're with another carrier like Blue Cross Blue Shield of North Carolina or another carrier, you may actually end up getting a check. I just haven't gotten the answer from them yet as to what they're going to be issuing. But let's just talk for a minute about how you are notified if you're going to get a rebate check. And there's really three different audiences here. You've got your individuals who have an individual plan, and usually the rebate isn't taxable if the consumer purchased that coverage with after-tax dollars. It can be subject to federal income taxes, however, if the consumer deducted the prior year's payment on their taxes. So that's why we like to say, go ahead and talk with your tax specialist to see if that would apply. Now, for you as the employer having the group health plan, you're going to get notified by mail with an enclosed check. Sometimes it's one check, sometimes it's more than one check. And that's because it applies to the MLR reporting year. So you may have plans that cross over that reporting year if you have a non-calendar year plan. But just now you may see more than one check or one check for all the options. Now, every individual who participated in that plan in the prior year, because this is for 2022, is also going to get a mail notification. So that is going to include what I like to call former participants. This can be employees who participated in the plan in 2022, but don't currently participate, or even former employees. And the reason it's important is when you're doing your MLR calculation, you do have an opportunity to limit it to current participants if the cost to provide it to former participants is just, more than the effort it's worth to provide it. It really just depends what the rebate is. We've had clients get rebates where it ended up maybe each participant got $100 back. We've had them where each participant gets $1 back. Well, it's not really going to be worth it to give that dollar to somebody who isn't participating today or isn't even employed any longer. So how do we distribute the rebates to these health plan participants? So you've got the employer, because the employer has contributed the lion's share of the money for this group health plan. And then you have the participants who in most cases are contributing to the premium, at least on some level. Should participants share in the rebate? Well, it really depends, and it's what's called the plan asset rules. So it's based upon the source of the premium payments. So what the employer pays, unless it's in a trust, and a trust would be extremely rare. So most employers are just paying it out of a general account. But so if the employer is paying the premium, then the portion attributable to the employer is not a plan asset. It's really the portion attributable to what the employee paid. So you may have a situation where the employer pays 100% for the employee, but the employee pays for dependent coverage. Or you may have a situation where every employee pays something towards the cost of coverage, but those paying for dependent coverage, their contribution is going to be higher than the individual who's just contributing to self-only coverage. Keep in mind, if you do have individuals that are on COBRA or FMLA, they would also be considered in the calculation for whether they should receive rebates or not. The plan asset rules, you have to use it for the exclusive benefit of the plan participants and the beneficiaries. So sometimes I get the question, well, what if we just have a party for everyone? I mean, that would be great. Be a party, we could have, I don't know if anybody ever used to watch The Office, but they had the party planning committee, and they always started with these grand parties, and it never ended up as grand as they wanted. But the bottom line is you're not really mostly benefiting or exclusively benefiting the people that participated in the plan. You're kind of giving everyone a party, and so that really isn't the way to go. The plan asset rules are different for employer plans, we call them private sector, or are different than for church plans and plans for local and state government. Now, if you're a church or you are affiliated with a church, it doesn't necessarily mean you have a church plan. You would have had to say no to ERISA status, which some churches do. And really the easiest way to know that is, do you offer COBRA or not? If you don't offer COBRA, you haven't elected ERISA status. So there are many different ways to look at the rebate calculation, but I think this is a very good example. This one's simplistic because in here you're looking at the employer and the participants. They're each paying a fixed percentage of premiums. In most cases, you may have people paying different percentages of premiums for different tiers of coverage. It all depends, but this gives you the idea. So you have your total plan premiums. You have 100 people that participated in 2022, and it was $1 million. So the total participant contributions were $250,000. That means they paid 25% of the total plan premiums. You take $250,000 and you divide it by $1 million. The rebate the employer gets is $15,000. So what is 25% of $15,000? 25% of 15,000 is $3,750. So that's the amount of the plan asset. And now that amount needs to be divided among the 100 participants. And so how do you determine who is a participant? Do you take someone who was there every day of the year? Do you take someone who contributed, who was there only the entire year? Or do you take what we call a snapshot in time? And I will say by and large, most employers like to use the snapshot in time because it's very difficult to track every single employee through the course of the year, especially if you have had a lot of turnover. So let's dive into that for a little bit. The biggest principle to consider, what I always tell clients, is it just needs to be reasonable, fair, and objective. You just need to be able to validate it. This medical loss ratio rebate does not match your plan's experience. So what do I mean? What I mean is it doesn't necessarily reflect whether you guys had a good year or a bad year medical wise. It's actually how the plan did in the entire state. So it's not a dollar for dollar return of premium. So it doesn't need to be thought of that way. It just needs to be reasonable and fair. You should only use it for the participants covered by that policy. And while there is what we call, there isn't really a de minimis rule, meaning there is no floor. You don't say, well, if it's $20, I don't need to give it to former participants. Mentally, you're supposed to look and say, is the cost to give this to somebody who is no longer participating, whether they're still there or not, is that going to cost me as much money as the rebate is? And if so, you can limit it to current participants. And I can tell you, by and large, 99.9% of the time, that's what clients do. However, you do have some cases, and every rebate is different. And especially if you have a small plan and I can identify who they are and they paid more for dependent coverage, then you can make that calculation. So you'll think to yourself, do you want to share the rebate only with people who participated in 2022? Do you want to share it with people who participated in 2022, but who are still participating in 2023? Or do you want to share it with people that are currently participating, regardless of whether they participated last year? And that last one seems like the strangest thing because it's supposed to be a rebate for the prior year, but it is permissible to give it to individuals who are currently participating this year, even if they didn't participate in the MLR reporting year. So once you choose your year for participant, then you want to drill down and say, okay, do I want to look at everybody who participated that year, just count them all up? Do I want to look at everybody as of a certain date, which I call a snapshot in time? And so, for example, you could use this snapshot method to select all the participants enrolled when the employer receives the MLR rebate. So maybe you've got your rebate checks September 1st, or you haven't gotten it yet, but when you get it, you could say, you know what, I'm going to give it to all participants that were enrolled on the last day of the MLR reporting year. It's December 31st. You could look at your invoice for the month of December and say, I'm going to share it with everybody enrolled there. You could use another snapshot date, first day of the plan year, middle of the plan year. It's just what's something that seems to be reasonable according to how you look at the math. So if you remember at the beginning, I said that the Department of Labor guidance is rather open-ended. And so you can see by this long winding sentence that where they use things that they say, in deciding on an allocation method, the plan fiduciary may properly weigh the cost to the plan and the ultimate plan benefit, as well as the competing interests of participants or classes of participants, provided such method is reasonable, fair, and objective. So that's a long way of saying that you have flexibility as long as you're fair about it. And making an allocation, so let's say you take that $3,750 and you just divide it among everybody equally. That would be perfectly fine. Maybe you want to use the calculator and determine what percentage an individual paying employee only is versus someone paying for dependent coverage and allocate the rebate that way. That's also perfectly fine. So there are private sector plans, so most employers. Just a couple of considerations. Generally, you can give it back in a check, and if the premium was paid on a pre-tax basis, which most plans are, the rebate is taxable income, and so the check would be subject to employment taxes. It can be very difficult to return, send a check to someone who's no longer there because for one, you don't have any way to tax it. That would be up to them to pay taxes on it. But also, you may no longer have their address, no longer how to reach them. If you choose to issue it as a premium holiday, so on X pay period, everybody gets $10 off, that's automatically going to increase the employee's taxable wages. Employers generally choose one of the two methods based on what is simplest in their payroll system. You can also use the rebate to pay for a benefit enhancement, such as a vision plan, but the rebate, of course, isn't guaranteed every year. So if you roll something like that out, just make sure that individuals know if the entire cost is covered this year by the rebate, it may not be covered entirely the next year. What you have non-federal, that means state and local government plans. So it's a very complicated slide, and I'm going to read the section that just says provide the rebate to all current participants on any plan. So it doesn't have to be limited to the one plan that people participated in. You could also provide the rebate only to current participants that participated the prior year. So you'd be using people that are still on the plan, but participated last year. And you could provide a cash refund only to subscribers that were covered by the health policy on which the rebate is issued. So it's very similar to the private sector, but it's just slightly different, especially the first one, because you can provide the rebate to all current participants on any plan. Church plans, a carrier can only pay the rebate to the policyholder church if the church stipulates in writing that the rebate will be used for the benefit of current subscribers. So really what happens is if you have a church plan, the carrier is going to pay the rebate directly to the employees of the church. That is, of course, assuming that the carrier is making the distinction among church plans. It may not be a distinction that they follow, whether it's subject to ERISA or not, but that is the rule related to church plans. So it isn't really a very complicated topic. I think the biggest issue is, do you want to limit it to current participants? Do you want to, and how do you want to allocate the rebate if you receive one? Do you want to do it across the board equally? Do you want to dive down and try to do it based upon dependent coverage versus single coverage and the different tiers of coverage? So here's a question. So this is a private sector employer. They offer a health keepers plan and they pay 100% of the employee only cost. The employees pay for dependent coverage. How should the rebate be distributed? So this goes back to the plan asset issue. So since the employer is covering the entire cost for dependent coverage, for employee only coverage, really it's only dependents, those with dependent coverage, that should get any sort of a rebate. You could also consider limiting the rebate to people that are currently participating with dependent coverage. And keep in mind, if the premiums were paid with pre-tax dollars, then the rebate will be taxable. So it's either a taxable check or you could do a premium holiday. So as an employer, we have a lot of turnover. How do I determine who is participating? Can I do a snapshot of participant on a particular day, for example? And the answer is yes. The rebate may be shared with any participant in the plan or just the participants as of a specific date. So an employer may select a snapshot that's reasonable based on the facts and circumstances. This could include the first month of a plan year or another reasonable date. And as a reminder, if the cost to provide the rebate to former participants is close to the rebate amount, the employer can consider limiting the rebate to current participants. Now that I've gone over the medical loss ratio rules, I do want to cover some new e-filing requirements, just in case it applies to anyone on the line. For the 2023 reporting year, if you have a self-insured health plan, you wouldn't be subject to the rebate, but you have to file your 1094, 1095B forms electronically. The only exception is if the employer files fewer than 10 returns total. So that includes W-2s, 1099s, and other returns. So if you're an applicable large employer and you're currently filing your 1094 and 1095C forms with the IRS by paper, you are required by law to required by rules actually, to submit that electronically to the IRS. And we would want to assist you with finding an e-filing solution if you're filing in paper today. You can file through the Affordable Care Act information return system, but you have to set up an account with the IRS. It can take a while. You have to have some IT people who can do the data exchange files, so we could help you get a service to file the returns. The next thing I want to talk about is what's called the gag clause, prohibition compliance attestation. That's probably one of the worst phrases I've ever had to utter. Like, what is that? And essentially what it means is health insurance contracts today can't include gag clauses. So meaning they can't keep certain provider information related to cost or charges. Doesn't mean they can't keep certain information secret, but in general, provider information has to be transparent, and also quality of care data has to be transparent. So if a provider's quality of care is really poor or really good, that isn't something that can be kept under wraps. It has to be made available. So why am I telling you this? I'm telling you simply because this is a requirement that the employer is ultimately responsible for filing, and it has to be submitted through the CMS portal. It's done either by the carrier, your third-party administrator, or you, the employer, and it's due by December 31st, 2023. I'm actually going to be doing a webinar on this topic in October if it applies to you. So for Anthem, this is directly from Anthem's website. They will file it for fully insured clients, and there's no action required of fully insured clients. That applies to small group, MIWA, ABF, minimum premium, and FEHP. ASO clients must complete the attestation. Optima, they will file for the fully insured, but if an employer is self-insured, they need to let Optima know by October 1st, or the employer has to submit the attestation. UHC will file for fully insured clients, and they'll provide a certificate of compliance for self-funded and level funded clients to submit. Okay. So you can see we have gag clause attestations and other employer changes. I'm doing a webinar on it, but by and large, if you have a fully insured plan, the carrier will be submitting it for you. If you do have a question on that, please feel free to reach out to your broker or to me. This is one of the provisions of the Consolidated Appropriations Act, and it's something that has been phased in over the last couple of years. So I'd like to introduce our podcast now. We have been, Barbara and I have been doing this now for a couple of months. We are still learning, but we just put out one on the Affordable Care Act employer reporting change, and we are on Spotify. So if you'd like to listen, let us know. If you have ideas on podcasts, let us know. They're just small 5-10 minute segments about topics that we encounter every day in our practice. So with that, I'd like to go ahead and open it up to questions. And again, I will be sending everyone a copy of the slides and the MLR calculator. So if you haven't gotten your calculator yet, if you haven't gotten your rebate yet, or you're going to get your rebate, then you can use that calculator. All right, well, I don't see any questions, which I hope is a good thing. And I would just like to close by saying thank you so much for taking time today. It is a great privilege to be able to serve you at your Towne Benefits, at TowneBenefits.com with your broker. So if you have any questions or concerns, please feel free to reach out to your broker or to me. And thank you again for attending.